Now let's talk about Ferrari, which of course is an Italian designer, manufacturer and retailer of sports cars, one of the world's most valuable luxury brands, $16 billion worth of market cap in its New York listing. It did an interesting separation from Fiat Chrysler, its parent company, which we'll talk about.
Ferrari is not a traditional motor car company.
Look at the share chart. But now that's not 5 years. That's shorter. That's since it came
listed,
to the US market.
which wasn't that long ago. It's a luxury goods business. That's how you need to value this company. That's why the dividend yield is low, and that's why the PE is high. So we can get over the fact that you can't look at this as a traditional car company. You need to look at it as like a Richemont or a Hermes, something like that. Because that's exactly what they do. They sell works of art to very, very wealthy buyers.
And you were saying that even within like a new model, they have like super ranges.
So that's where they make a lot of their money.
Exclusive.
So you would buy your entry-level Ferrari for a cool price of $250,000, but then you might get something special that'll come around, like the Love Ferrari, where they'll only make 499 cars. They'll sell that for $1 million, you know, 4 times the amount. But then for this extra special people, you'd get the LaFerrari track car, which they'll only make 40 of them. They'll sell this for $2.5 million.
And that's got sort of technology incorporated from their racing division.
Correct. And that's their main advertising. They don't advertise. It's literally I think they've only got 130 stores in the world, and it's the Ferrari F1 team. And 70% of Ferrari buyers have previously owned a Ferrari. So the switching between manufacturers is almost unheard of in Ferrari. In fact, if you have a look at the 2008-2009 disaster for worldwide car manufacturers due to the financial crisis, Ferrari saw only a 4% drop in volumes.
Well,
if you look at the others,
who's,
massive.
Having a good year.
So that's why it's valued like this. They are incredibly stable throughout cycles. They don't have cycles. They've got this continuous move upwards.
And just to be clear, so they did this separation and they basically unbundled the shares in Ferrari out to the previous shareholders of Fiat Chrysler. But as a matter of interest, the Agnelli family of Italy are the controlling shareholders of this and Fiat Chrysler. Is Sergio Marchionne the CEO of both companies? How does he manage that?
I have no idea. I think he's the chairman of Ferrari, as far as I understand. I don't know if he's still involved in Fiat at all. I do know that they took on a lot of, not hidden debt, but it's on the balance sheet. So Ferrari might look a little bit debt-free, but there's still a little bit of a holdover from that.
What you said earlier is that, you know, people buy these cars, they don't really care what they, you know, sell for. Is it the same with the shares, that people who like this company are going to go and buy a few trophy
I think the share price re-rated because the market viewed it and said, guys, this is getting a little bit cheap. It's probably well priced for a normal automobile manufacturer, but if we value it alongside all the other luxury goods companies that are out there,
happy to pay a 30p,
which you're happy to pay a 30p and get a sub 1% yield, but you know that there is stability and defensiveness across all the cycles.
So you're going to go hot on it?
Yes.
Okay. What the hell? Let's go hot on it as well.